Welcome to today's edition of Toggle's Daily Video Insights. For anybody who is joining us for the first time, welcome. This is one of those insight overviews that we do every market trading day, where we take one of the insights produced by Toggle across 15,000 assets and just take a more careful look at the price pressures that the system is highlighting and the drivers ranging from earnings, analyst expectations, momentum, growth in sales, and so on. If you'd like to see more of these insights, subscribe to our YouTube channel, or otherwise you can also check us out on toggle.global, where you can sign up for the daily brief, as well as also check out Toggle Copilot, which is the system that we use. Today, the focus is going to be on General Mills, a company many of you will be very familiar with, if nothing else because of the breakfast cereal. And what we're going to focus on today is the latest insight that Toggle has produced, which is highlighting that momentum could potentially power the stock quite a bit higher here. Again, hovering over the arrow, you can see that the starting point of 58.62, the downside risk is to 56.34. Below the red line, the odds of the pattern no longer go down quite substantially, and the target at 63.19. Now, to look at the details of this particular insight, we click on the card and the system loads the underlying analysis, where we can see the confidence band as well as the green and the red line, highlighting that the price over the next few months should really stay within this window before reaching 63.19, or potentially even extending all the way up to 66 or above, and not dip below 56.34, where the sign would be that the odds of this pattern holding and this being the relevant driver would be greatly diminished. Now, Toggle has looked at 27 similar occasions in order to produce this analysis, and if we click on why it might move, we'll see exactly what has effectively happened. And in this case, you can see is that momentum has pulled back a little bit, both the 12-month as well as the 6-month momentum. And historically, the highlighted levels here are the points where Toggle has uncovered similarly stretched momentum to the downside. They have tended to coincide with the bounce in the stock price subsequently. Now, to see this in a little bit more detail, you can always click on the backtest, and this is going to give you a very, very accurate view of what these past returns have actually been. So the left-hand side gives you a sense of past performance, proxied by assuming you had invested $1 in the first of these episodes and then reinvested in each of the subsequent 26, you would have ended up with $7, quite a good return. But equally importantly, looking at the risk reward, where these are the actual returns, and you can see that many of them actually were quite a bit higher than the current median, nearing 15%, and the downside risk occasionally would stretch as much as almost down to 10%. So it's decent risk reward, but definitely some downside risk, meaning that it's good to keep those stop levels and be quite serious about respecting them. So much for General Mills today. In the daily brief, we also discussed the implications of the current big ships stuck in the Suez Canal for the oil prices and the views on the commodity from here. So if you are subscribing to it, the daily brief should already be in your mailbox. And if not, you can subscribe at toggle.global. It's free. Thank you for your attention, and we'll talk to you again on Monday.